Hey everybody, how's it going? Matt here coming at you with another indicator video about a Ranger 2.0 indicator. And in this video, I'm going to be diving into detail the stop loss setup, and I'm going to show you how to use that. Actually meant to start this video without the indicator on my chart for a specific reason, so just pretend you didn't see it. But anyway, what I'm going to be doing is I'm going to be really diving into the stop loss setup here and explaining in detail what it is, how to use it, and everything there. So it's going to be a good one. And yeah, so I'll go ahead and get started. So we've given you three options here to set three different ways to set a stop loss. And before actually I get into that, I'm actually going to back up for a second here. And just really quickly, for those of you that are kind of newer, what a stop loss is a way for you to tell your broker or brokerage, I don't want to be, I want to, at this certain point, and it could be a dollar amount, it could be a percentage amount, it could be a certain number of pips. You're saying, I want to get out of this trade. I want to just cut my losses and move on to the next trade. And so a stop loss is a way of limiting your risk. And by placing a stop loss, you're essentially just saying, hey, if price gets to this point, I just want to move on and get out of this trade. So that's what it is. And in this particular indicator, we've given you three different ways that we think, especially the two ways that a lot of traders will often use to place a stop loss. And now every trader has a slightly different way of doing it. But two of the most common ways that you'll find is traders will use the last pivot low if they're long, or last pivot high if they're short. And I'll show you what that looks like in a second. Or they'll use the average true range, or ATR for short. And I'll explain in more detail, what that is, and everything. But I want to go ahead and jump into the first way, which is using the last pivot low and the last pivot high. So we can see here on my chart, we have a couple pivots, and I'm going to sort of draw these out. We have a pivot high right here, and I'm going to draw this line. That's not a perfect line, but you get the point. And then we have another pivot right around here. And then we have another pivot right here. And you can see here, right on my chart, what we can see of my chart anyway, we have, about three pivots, one pivot low and two pivot highs. And that's acting as, support and resistance pretty much. But what this indicator does is it's automatically going to use these pivots to place our stop loss. So for instance, if we got a short signal or a sell signal right here, it's going to use this last pivot high to place our stop loss automatically, and it's going to place that on our chart for us, which is nice. If we got a buy signal right here, it's going to use this last pivot low in this case to place our stop loss, and then obviously it's going to use this as well. So I'm going to add the indicator to my chart now, and we can see that's exactly what it does. It uses those levels to place the stop loss. So nice feature there. I will warn you though, on a 4-hour chart, that's pretty long. I would not be placing my stop loss at the last pivot low on a 4-hour chart. I would really more so look to do that on let's say like a 15-minute chart or a 30-minute chart maybe. We can see here that, and let me just remove these lines that I had drawn, that this is going to be quite a bit of risk. So that's 68 pips for your stop loss. That's too much. That's more than I would put. Again here, this is also going to be a very wide stop loss. So these are using the last pivot is, again, on a longer time frame, like the 4-hour, going to be too much risk, too large, too wide of a stop loss. We want to place a tighter stop loss than that, or at least you probably do. So the other way that we can place a stop loss is by using the ATR, or average true range. And we can see here right now we have last pivot low. Just click this drop down and select ATR. And now you can see here that our stop loss actually moved from, it was right here. It actually moved probably about, I would say about halfway to our entry, which is good. And it still didn't get hit, obviously. Same thing here. This stop loss moved from being right here to right here, and it's still, our stop loss never got hit. Again, here it moved from being way up here to way down here, and our stop loss never got hit. So I would definitely look to using the ATR over the last pivot for the longer time frames. Just an FYI there. So that's what it is. What the ATR is, I'm not going to go into it in detail in this video. It's a volatility indicator, so it's essentially trying to find the average true range, as the name entails, and then sort of figuring out, okay, well, using the ATR as a stop loss is basically like saying, I doubt that price is going to, go beyond this point because on average it's not that volatile. That's sort of the idea there. But anyway, I'll link to maybe a video below that explains in more detail about that. But the third way is actually entering manually a specified number of pips, or pips in this case for the Forex, and then for the stocks version, it's actually going to be a percentage. So keep in mind that if you're entering in manually for the stocks version, this is in percentages. So 1 is 1%, 10 is 10%, and then not that you'd ever enter this, but 100 is 100%. And then for the Forex version, if I wanted to enter in manually a stop loss here, it's in pips. So 50 is 50 pips, 5 is 5 pips, and that's how that works. So we can see here that changes my chart as well, and you can even get a tighter stop loss in some cases, although I'd be cautious to go too tight because you don't want to get stopped out of your trade all the time. Obviously there's a bit of a trade-off there in terms of your stop loss. The tighter stop loss you set, you're not taking as much risk, but you're also going to get stopped out more. If you place a really wide stop loss, then you're probably very rarely going to get stopped out, but you're going to have a lot of trades that that don't go in your way, that you're taking, that you have a lot of drawdown on. Essentially, you're losing money for a while, which is not fun. So there's a trade-off there, something to play around with. Again, I definitely personally for me, I use the ATR on a longer time frame, and then on a shorter time frame, like a 15-minute, I might drop down and use like a last pivot low, or maybe an ATR as well. Just something to kind of play around with and see what works best for you. But you have all of those settings in there at your disposal. The other thing I'll mention real quick is you can adjust the ATR length and the ATR multiplier here. So if you even wanted to place a tighter stop, you could use 1 instead of 2, and then you'll see that should move. So that moves my stop loss even to even a closer amount, closer to my entry. Again, you don't want to go too close, because we can see here we actually almost would have gotten stopped out, but not quite. Here we would have gotten stopped out. Here we would not have gotten stopped out, but it's close. You don't want to place too tight of a stop. Just FYI. So that's that in terms of the 3 ways to set a stop loss. The other thing that I want to talk about is this break even. So what this is going to do, and we have to check this box to enable it. But first, before I do that, I'm going to go back to the last pivot low. Not that it really matters. It works for any one of these methods, but that's just the easiest one to see. And I'm going to check this box. So what this is going to do is it's going to move my stop loss up to my break even, which is my entry, right? Because that's the price that we bought it at. So that's the price that we're going to break even if we sell it at. It's going to move that stop loss up to that entry, up to that break even point at a certain number of points in profit. Now, oops, my bad. You notice I said points. Everything in this indicator in the Forex one is in pips. All of these numbers, well, not these numbers, but these numbers are in pips. These numbers are in pips. This number is in pips. Well, this number is not in pips. This is the part of the ATR, but you get the point. They're all in pips except for this one. This one is actually in points. And I'm going to work on an update. I'm probably going to change this to actually being in pips so everything is kept consistent. But for right now, this very moment, it is in points. But thankfully, it's very easy to represent pips. All you have to do is add a 0 to whatever you want to represent in pips. So let's say, let me clear this. Let's say I want to represent 50 pips. Great. What do I put in this box? 500. 50 pips is equal to 500 points. So if I want to represent 50 pips, just put in 500. Again, that's probably going to change in the future. I'm going to try to get this to all be in pips, or for this specific option to be in pips, and I'll update you guys on that. But it's really easy to figure out what it is, and I'll show you how in a second. But I'm going to go ahead and move on to that. So, okay, I'm going to check this box and we can see here, look at what that does. I'm going to, let's watch that over a few times. So uncheck and look at this, keep your eye. I was pointing with my finger, but you can't see my finger. Keep an eye on this red line right here. Okay. Look at what it's doing. It's moving our stop up, and so you can see that. So let me show you how that works. Let me just maximize this. So what it's doing is, let's ask ourselves, at what point is this trade in profit by 50 pips? So again, I'm just using this drawing tool here, and I'm measuring from our entry all the way to 50 pips. I don't know, let's see if I can get it exact. Okay, not quite exact, but 50.3 pips in profit. And we can see here, I'm going to actually draw this line out. So at what point, oops, that disappeared. At what point does price hit this horizontal line? You say, well, Matt, right here, this candle. And if that's what you said, then you'd be absolutely correct. At this candle, price actually hits 50 pips in profit. So that would have been, December 3rd, at 2 o'clock in the afternoon. Our trade is in profit by 50 pips. Yippee, we're really happy. And now what happens? Our stop loss, because we put in here 50 pips for our break even, our stop loss is now going to get moved to our entry. And the reason why I know that at that very point is because look at here, I can draw from when this line goes from being horizontal to pretty much vertical. I can draw that down and sort of match it up. Excuse me. And so yeah, that's pretty much it. And then if you ask, well, why does oops, let me get rid of this. Why does it get moved down to right here? Well, great question. I'm glad you asked. Well, because if we line up this with my cursor, that's exactly what was our entry. So this was our entry. That's where our stop loss gets moved down to once we're in the trade by 50 pips in profit. Hopefully you guys were able to see that. I think it's pretty simple. Maybe I'll show you another example. So if the trade is never in 50 pips in profit, then it won't get moved. Let's look at another example. Also, if the stop loss is actually like this time, we kind of were screwed out of this trade because we got stopped out by this, big screw you candle. So in this case, our stop loss never gets the chance to get moved up to our break even because we got stopped out. But here we can see it again. Our trade, where's our trade in profit by 50 pips? Right about there, which happens to be this candle right here. And you can see here, that's exactly where our stop was moved. And again, it was moved to our entry point right there. So that's how that works, guys. Not too much to it there. And I don't want to make this video 10 minutes longer explaining that. But something to play around with, what I like to see on my chart is this like weird S shape, I love that, because what that means is that all of my profits here are protected and they were never hit. So like on I know I'm jumping around a lot. So on this trade here, this is really nice because this trade went in our favor, right? Like immediately. And once we were in profit by 50 pips, our stop loss was moved up to our entry, but it was never even hit. So we were able to exit this trade hopefully we were able to exit it at a very nice profit. But even if for whatever dumb reason, let's say we I don't know, God forbid we got sick or something and walked away from we were away from our computer, away from our brokerage, we couldn't place trades, our stop loss is at this break-even point anyway. So even if we weren't able to exit this trade until way over here, we still would have exited at break-even. So it's a cool feature there. Again, do keep in mind though that this isn't acting as your broker. So you still have to place these orders in your brokerage. You can kind of integrate here with you have some options here to integrate with some brokerages here. But this is more just a visual sort of representation of what's going on. And it allows you to kind of automate that process visually, which is really nice. But do keep in mind, you still have to place those orders in your brokerage. So yeah, that's pretty much it in terms of the stop loss. Again, just to kind of recap here, we give you 3 options, the last pivot. the average true range or a manual entry. And then you can also move your stop loss up to break even at a certain number of pips. Points, which by the time you're watching this video, maybe hopefully it'll be in pips, but just make sure that whatever it is, you know what it is, because the last thing I'd want for you guys to do is to enter in 50 or let's say 500, thinking that it's in points, and then I updated the indicator and now it's in pips, and you're like, so just measure it out, make sure. But by the time you're watching this video, I'm pretty sure I should have that update already published, and this might actually be in pips. But anyway, just something to be on the lookout for there. But that's it in terms of stop loss, guys. Keep crushing it with your trading. Make sure you're setting a stop loss that is an appropriate amount of risk for your trading strategy and your the risk that you want to take just based on market conditions. And happy trading, and have a great rest of your day, your night, your evening, and see you guys in the next videos.